Echo, they had results out. Echo, in fact, Driver Group is above that, but Echo, I quite like it. It's more scalable. So they dropped from number 16 down to this week's number 67 on the MicroCap League. So what do they do? They're a global provider of customer engagement, data security solutions. Echo is all about making the world's data more secure. So when you pay for stuff through third parties or through data centers, that's what they do there. In fact, if you click on here, engage, secure, protect. The industries they're in: telecoms, media, retail, hospitality. So they provide, I think, the sort of secure payment interface for these companies. So and these are some big clients use them, So it's highly likely when you're doing a secure payment over lines, sometimes you can be using their software. So I quite like this because I think in my mind, I like the sector. I'm not saying I like this company because in my mind, digital commerce is not going to slow down. Of course, it may encourage more competitors, but it's the way forward, isn't it? I hate going out to the shops. If I could buy everything in the house, I would. My wife is opposite. She loves going and feeling and touching things. I hope it's things, not men. Shop assistants. Ooh, hello, young man. But I don't. I prefer to do it. So I just think, as far as the sector is concerned, you're going to have more commerce happening online, not less. It's going to be more people trying to scam you, more intricate scams. So I think it's a good sector to be in. It's a very good area. So that's where they're in. Anyway, let's look at the tail and tape for Echo. Share price, 43 pence. Target price, 92 pence. The broker's got 113 pence or 113% upside on this. Market cap, 124. So really, it's just outside the MicroCap League, but enterprise value is 115. So it's close to the 100 million market cap. Net asset per share, 16. So it's not good. The volume is good. Decent volume, 150 grand pretty much. Revenue, 37 million. It's already thinking, well, we're on big margins then if you're going to be 3 times sales. Operating profits, they are profitable, 3.2, cash of 8.3, no debt. I always like that. I went a little bit there. I always like to see a clean sheet there. Operating cash flow, this is for the full year results, by the way. We've just had half year results. No, we haven't. Just had full year results come out. So this is full year results. A little bit of a dividend, 1.3. So let's have a look at the tail of the tape here. Growth down 4%. Operating profit down 35%. Net profit growth down 2%. I gotta say, they did try and put a very positive spin on their results. I thought, hang on a second, it's not that good. What are you talking about? Are you trying to have me on? In fact, what do they say? If we look at what they say, right, this is my rule of thumb, okay? Whenever you look at reading RNS, it's got full year results in, okay, or interim results, which should be about the figures, and you get swathes of text before you get to any figures. You think, okay, what you're trying to do here, mate, is you're trying to polish the turd a little bit, yeah? Because so Nick Philpott, chief executive, this was in many ways a milestone year for Eco. In many ways, apart from the revenue and profits, but everything else was good. Yeah. So I always think that the longer the text, right, and this generally happens with almost loss-making companies, pre-revenue companies, not Echo, but the longer the explanation at the start from the CEO, trying to say, you have to put them in context, just put them in context. No, I don't. I'm just going to compare them to last year's figures and see if we've improved or not. So the longer the sway the text there, right, the worse they've done, pretty much. The more they're trying to explain away. The first half was all about excellent contract renewals, but the second half was all about new business wins. So essentially didn't win any business in the first half. That's what he's trying to say. It's renewals in the first half. So anyway, the strategic decision at the beginning of the year to create a single commercial team focused on North America has delivered early success. Okay, so they're focusing on North America. So there's a bit of a transition there. So we forgive them for that. So, but anyway, let's go back to it. So, if whenever you see that, stick in your head, okay? If the company, especially generating revenue and profits, and a big chunk from the CEO, either the CEO's got a big ego, or they're trying to put you in context and say, prepare for these figures. They may look bad, but let me explain. It's like your son who comes home from school in trouble. No, let me explain what happened. I've heard what happened. The teacher told me. No, that's not what happened. That's what CEOs are trying to do. Okay. Anyway, let's go back to that. Sorry. Getting slightly carried away. So price of sales 3.3, PE 27. It was 49 for the. They are new. They are right there. I've won some contracts second half of the year. Price to book 2.75, EBITDA 14. It's not, it's not about. I don't like these results, but this type of business I quite like because price free cash. Anyway, so look, the current ratio is fine. 83. What I like here is 83% gross margins, right? If they can start sorting themselves out, they could fill out these margins. So operating margins, 8.7. Return on capital employed 7. Nevertheless, we are in. Didn't it fall off a cliff here? We are in an uptrend here. Let's have a look at Echo's share price. I'm sure it fell on those results. Or do people really like it? Did they fall for this? No, it didn't. Oh, it's in a bit of a range. So be careful here. I put an alert, on this level here, because it hasn't pretty much closed above that 40, sort of 45, 46 level for a while. Just trying to make a couple of. This is today, so it did go up by 12.6%. So it did fall down on the results. So what was the results then? It was 11th of June. 11th of June. Okay, so that was there. It did. Well, it didn't go anyway. But I think there's potential here. I'm not going to say anything. So obviously it's come down from a little way here. But like I said, I do think they're in the right area. But it's just, what's the competitiveness like? And I suppose that will be reflected in their margins and how efficient they are. In my mind, judged by the figures rather than trying to guess the sector, because I'm not an expert in the sector. But anyway, Echo. What do you reckon, ladies and gentlemen? Let's have a look at the, before getting into that. Let's have a look at the forecast going forward. Let's look at what's like the book forecast. They're saying 10% growth for next year. I mean, I'm assuming this is recurring revenue. So you're not going to get massive upside potential, but it's sticky. So when you can guarantee pretty much 10% growth, it's almost better than an unpredictable maybe 20% because it's there. So 10, 6, 6 pretty much. Yeah, we're seeing margins sort of. Oh, look at this. You're seeing margins fill out here, predictive. You're seeing operating margin to get 23%, they reckon here. 22. So net margins here, 20%. So there's potential here. And if you see on the value forecast, it starts, I'm not saying the share price will stay at this level, but this level will be down to PE of 9, 8. So multiple sales of 3, EBITDA of 10, 15. I still only don't have much upside there. It's because their market cap is almost ahead of itself. They are. So they are over 100 million. So there we are. Okay. What's your thoughts on Echo? Echo, this is from Alex. No, very erratic, profits history and poor relative strength. Okay. Anyone else on Echo? Echo. Mark V. Not for me, says Mark V. Ignore inconsistent, high P, overhyped. I think it's a bit of that, isn't it? Yeah, do you know what? Maybe it is sucking me in on that. But if you look at the valuation, the growth, it's not there, is it? I mean, 10%, it's not particularly there. We've just talked about growth, value, health, growth, value, momentum, and it's got none of them, really. It's healthy, but where's the growth there? Gareth says, Echo buying a breakout 50 pence. Yeah, that hype may push it up. But as far as I'm concerned, sorry, Echo, it's one to ignore. Ignore.